Good morning, and a terrific Tuesday. Welcome to today's episode of Morning Well. Three things that we will talk about: China's own unreliable entities list, the cost of stimulus gridlock, and ECB is attentive to euro's appreciation. The Dow Jones dropped more than 500 points, falling in tandem with oil and gold and sparking worries among investors of further turbulence ahead. The simultaneous declines across various asset classes spurred anxiety among investors and traders who fear a repeat of a market turmoil that we saw in March. US oil prices was down about 4.4%. Gold was down 2.6% to its lowest close since late July. Monday's losses were actually broad-based. 10 of the 11 sectors in the S&P 500 dropped, led by economically sensitive groups like materials and industrials, which both fell about 3.4%. The tech sector, on the other hand, finished the day in the green, up 0.8%. So it's stark difference between the corrections that we have seen in the past 3 weeks, where technology has been the place of correction, while cyclicals were holding up pretty well. But yesterday the market sold off across the board. Shares of airline, retailers and energy companies were also down. Delta was down about 9.2%, Coles was down 8.1% and Halliburton was also down about 8.5%. Those decline weighed on the major indexes. Dow was down about 509 points for the day. A late rally in tech stocks, including Apple and Microsoft, helped the Dow bear some losses in the final hour of trading after earlier declining by about 942 points. The S&P was finally ended up down 1.2%, while the tech Nasdaq was down about 0.1%. Some investors sought safety of government bonds and went towards the 10-year Treasury, pushing the yields lower to 0.67 from the Friday's close of 0.69. In other markets, Europe was down sharp. DAX, in fact, was down about 4.5%, while the Euro Stock 600 was down about 3.2%. Coronavirus cases has been rising across European economies, leading to a speculation that governments will be forced to implement new lockdowns that will curtail business and social activity. Apart from that, the news on the financials also did help. Hong Kong listed shares of Standard Chartered and HSBC tumbled on Monday following reports that they allegedly moved large sums of suspicious funds. So the sell-off started in Asia, and in afternoon, London-listed shares were down about. London-listed shares of Standard Chartered was down about 5.2%, and HSBC was down about 5%. That drop on HSBC has taken the share price to a 25-year low. Investors are also unnerved by the continuing tensions between US and China. Over the weekend, China's Ministry of Commerce laid out penalties for companies and individuals it deems to be unreliable entities, including potential restrictions on staffing and investment in China, curbs on imports and exports, and fines. The list is aimed at foreign entities and individuals that could harm Chinese interests. No names have thus far been disclosed, but the development is likely to add another stress point in the already strained relations between US and China, as it signals Beijing may step up retaliatory measures, is what some investors fear. What's the cost of the stimulus gridlock? Bloomberg Economics did some analysis, and the lapse in unemployment benefits and small business aid is set to subtract at least 5 percentage points from US growth in the fourth quarter. Bloomberg Economics had already marked down the near-term pace of recovery, with growth over the next 2 quarters averaging little better than stall speed. Lastly, on the FX front, considering the economic toll caused by lockdowns, the second wave poses a significant risk for euro and sterling. Both currencies fell sharply on Monday, and more might follow, with the euro targeting levels towards 1.15 and GBP at about 1.25. Even ECB's President Lagarde seems to be concerned, as she talked about an uncertain and uneven recovery, along with the availability of options if more stimulus is needed. Her most notable comment was on the euro. She previously urged investors not to overreact on its rise, but yesterday she said that they are attentive to the euro's appreciation, which is really a green light for euro bears that are there out there. The euro and sterling, aside from the virus headlines, will also focus on the PMIs. And if this month's report shows some deterioration, we will see further losses in these currencies. That's the update. Stay safe and healthy, everyone, and speak tomorrow.